The Pinoy Boomer!
Hello, kaboomers! This is the Pinoy Boomer back with another video. In this video, let's understand the price to book ratio in stock investing. So, this ratio is used in conjunction with the price to earnings ratio. By the way, if you like to learn more about the price to earnings ratio, please do click the link on the right corner of the screen to watch that video and learn more now, learn more about it. So let's go back to the price to book ratio, or PB ratio for short. Now, how do you determine if a stock is overvalued or undervalued using the PB ratio only? In the book The Intelligent Investor, Benjamin Graham said that if the PB ratio is less than or equal to 1.5, it means that you're buying that company's share at a at an undervalued price. It means it's cheap. Okay? So, in Benjamin Graham, again, if the PB ratio is 1.5 and below, it is cheap. It is undervalued. Now, I would just also like to add as well that in other investment reference sites in the internet, like Investopedia, they are saying that the uh, price to book ratio would signify undervaluation or overvaluation if if it's 1 and below, that's undervalued. If it's higher than 1, it is overvalued. So that's what the reference sites are saying. So, so the bottom line is whether you follow the Benjamin Graham criteria of undervaluation of a price to book value, or what's written in the investments reference sites. The bottom line is if it's less or equal to those ratios, to the recommended ratio, it is undervalued. Okay. Now, where do we get the price to book ratio? Now, we could simply get it from your financial websites like Morningstar or MSN Money. Now, to name a few examples. Or we could compute for it by dividing your current share price by the book value per share. The book value per share, you can also get them or get it from financial websites as well. Now, how do we interpret the price to book ratio? Basically, we interpret the price to book ratio as if we buy shares of a company right now, and and the company will sell all of its assets based on its book value, the lower the number, the larger the gains we will get from the sale of those assets in terms of its book value. I hope I communicated that clearly. So let's now proceed with an example as to how we compute for your price to book ratio. Now, in the PSE Edge website, the Philippine Stock Exchange Edge website, let's compute for the price to book ratio of Security Bank, ticker symbol SECB. Okay. Now, as I've said earlier, to compute for the PB ratio, we first need to get the current share price. And for this example, we'll just get the last traded price, which is 72 pesos and 30 centavos. Okay? And let's go to the financial reports and let's get the current annual year of our book value, which is 166.88 pesos. If we divide 72 pesos and 3 centavos by 166.88 pesos, we will get a book value, or we will get a price to book value of 0.43. Okay? So, let's just use the Benjamin Graham criteria. So, since it is less than 1.5, it means that our price to book ratio computed for Security Bank is undervalued at the current stock price of 72.30 pesos. Okay? So, just like with any other metric, you should not compare the price to book ratio of one company to another company in a different industry. So basically, the what I'm just trying to say right now is, if you want to compare your price to book ratio and any other financial metric, it should be compared with the between companies in a similar industry or in a similar line of business. Okay? So, if this video helped you understand how to compute the price to book ratio and what its significance, please do click the like button. And if you like to give you some feedback or you have some ideas for me to consider in my next video, please do leave a comment. And if I earned your subscription to my channel, please do click the subscribe button. So, this is the Pinoy Boomer signing off. Bye-bye!